Here we have the daily price chart for CHEWY Incorporated, stock ticker CHWY. As we can see here, the previous two trading sessions, trading days have been negative, and we've been watching this price support zone at roughly 23.90 as an area of potential buying activity that could be suitable for a bit of a longer term long position. Currently, we are seeing some selling pressure here, but what we should be noting here is the fact that there's a lot of selling that's occurring currently in the market. We're seeing major, it's mostly tech companies, but we're seeing large sell-offs in many companies in the S&P 500 and in the Nasdaq, and this does suggest that there is a broad level of selling pressure that's currently active in the market. This can do do a lot to weigh on sentiment and cause people to start to take money out and possibly book some profits here. So it's not totally surprising to see a bit of a downside price movement in CHWY, given the current, given the broader context that we're seeing. Overall, I do think that we should continue to kind of look for support zones to develop as we move into this 2390 level roughly. The reason that I selected this level was because if we're looking at the dominant trend movement here, we can draw this level using the April 25th lows, which came in at 1469, and then extend this price movement to the June 27th highs, which posted at 3910. So if we're looking at this as the dominant trend wave here, we can see that prices did manage to find support right near this 61.8% Fibonacci retracement, which came in at 2391. So, this is a very significant level going forward. And this is being further solidified now by the fact that we do have this ascending orange line here that's now coming into this same price level. This marks the 50-day exponential moving average. We have to remember that this is the daily chart. So all of these moving averages here, yellow, orange, blue, and purple, these are all daily moving averages. So these are the moving averages that are most closely watched by the market, and they tend to have the most significance when we're looking at chart analysis. So currently we are trading above the 20-day exponential moving average, even with these declines. So that's encouraging on its own. We haven't really broken that level as a support zone. This level really would be coming in at roughly 2570. So this would be one area to watch to the downside. If you're currently long the stock, you would want to see a bounce from here, because if this level did break, you might then start to retarget, this 2390 level, because there isn't a whole lot here to be seen in terms of technical support zones that could continue to drive prices higher. But with that said, we do have this rising orange line here, which does suggest that support levels could start to develop at higher and higher levels. In addition to that, we can kind of see here, I'll try to find a good view of this. So here we can see that, this orange line has crossed above, we first crossed above this purple line, which was the 100-day moving average. So essentially this is a 50-day cross above the 100-day EMA. And then this upward trend here continued. And then we also crossed above this blue line here. So we have the 50-day moving average crossing above the 200-day exponential moving average. So these are all positive signals here that are developing, sort of in the underlying share price momentum. In addition to that, we can point to the relative strength index, which continues to show a very nice upward slope in its trajectory. This price movement really began, this would have been September of last year, the second half of September last year, and it really has continued in a fairly uniform manner since then. This has been a very strong and stable uptrend. And this was one of the reasons that we bought the stock initially, because we were seeing a bullish divergence here with the trend indicator trending higher, the momentum indicator trending higher, while prices were still trending lower. So, in anticipation of a reversal here, we were able to start to get long this stock and capture a lot of these gains in the process. So currently, we are seeing a bit of downside here. I wouldn't be too concerned about it because, the momentum reading remains strongly positive. We're seeing several upward breaks in the exponential moving averages. We've got a bit of moving average support here, relatively close to current prices, and then we do have kind of our main support zone here at 2390, which marks the 61.8% Fibonacci retracement of this latest rally. So, there are a lot of factors here that are pointing to the same area. As far as longer term targets are concerned, this does get a little bit erratic once we start to move above this $30 mark. And in my opinion, this is probably why we're starting to see some failures here. I think there's a bit of uncertainty once we start to reach this level, just given the fact that, this strange spike higher in share prices really has created a bit of an unpredictable situation in this upper region here. Ultimately, this was really a reason to stay away from the stock initially until we found some support that started to develop in this 2390 region. So, as long as these trends remain active, we would expect to see a final push above this $30 mark. Once that starts to occur, you probably will start to see some bit of a better slope in the share price momentum. We will probably start to see prices, move higher with a bit of a more stable and strong uptrend relative to what we've currently been seeing. I mean, here we're really just kind of waiting for the dust to settle. I mean, there was a large amount of upward price action followed by a large amount of downward price action, and that's a really uncertain environment where you don't really want to be trading in those types of positions. So, currently the real argument here rests on, whether or not we can stabilize at this 2390 level. If we can do that, the next level to the top side really starts to develop just above the $40 mark. This spike high here did result in a high of 39.10, but I'm not really viewing that as the most legitimate, the most valid price zone to the top side. I do think that this 40.77 level is much more important from the historical perspective because this 39.10 price high was so short-lived. I mean, it didn't last very long. We're talking about a couple of hours here. Prices really spiked higher, then they reversed quickly back lower. It was really a whipsaw price movement. It was very easy to get stopped out in a position like that, even if you're trading on the right side of the market. So overall, I'm not really viewing this level as the true resistance zone. And if we do see a retest of this area, it would mean that the $40 mark is also being breached as well. So currently we're having a bit of trouble with the $30 mark, but I do think we could see a fairly quick move to the top side here. At least a test of the $40 mark relatively quickly, as long as we continue to stabilize and this 2390 level remains intact. So here's the current market outlook for CHEWY Incorporated, stock ticker CHWY.